The JSE All Share Index is slightly down, around 63,617 points today, remaining close to one-year lows pressured by industrial and tech stocks. Concerns over the economic outlook persisted largely due to that invasion of Ukraine, high inflation and interest rate increases. Petri Redelinghuys is trader and founder of Herenya Capital Advisors, with us as always to have a look at how the markets are doing at the beginning of the week. Petri, good to see you again. The rand still sluggish, as I was saying, against major currencies. What are your expectations for the hours and days ahead?
Well, firstly, good afternoon. Thank you for having me. And I think I'll admit that I'm a bit surprised at how well the market is trading at the moment. Top 40 index is positive, believe it or not, by 0.1%. Given the mood we saw around financial media and the rumor mill, I guess, over the weekend, it is a bit surprising. Essentially, there's a lot of speculation that some of the larger investment banks around the world, particularly Credit Suisse, is in quite a bit of trouble due to pension fund exposure. What's basically happening is UK pension funds hold a huge amount of UK government bonds, and there's been some policy missteps in the United Kingdom or in England specifically over the last week or so, and we saw government bond yields in the UK, the gilts, rise dramatically from 3% to 5%, and this in a very short period of time is a very, very big sudden move. Which essentially means as yields go up, bond prices come down, pension funds are invested in bonds, they have certain liabilities that they have to see to, and the value of their investment portfolio just drastically reduced massively, right? So they are being asked to post collateral to make up for the shortfall, and their pension funds don't have the collateral, which means that the liability falls to the banks. So the one that seems to be the most exposed at this point is Credit Suisse. So this is now essentially what's going on in the market over the weekend. So coming into today, you would have expected, well, at least I expected, fireworks and fire and brimstone and the market to really come tumbling down. And that has not actually been the case. The market seems to be rather robust, mostly flat. I think potentially waiting for the US to open. Look, Credit Suisse shares are down some 10%, but the rest of the market is holding up pretty well. So I think it's a bit of a sign of the times, really, where we've had a very tough market environment for the majority of the year so far, and we've been trading very much from headline to headline in the sense that, every now and then, something else that is, ultra scary comes out and the market responds to that, or, something that's remarkably positive comes out and the market responds to that. The overall trend for the market has been down since January, and, every now and then we've seen a bear market rally, on the back of much excitement, but no follow through on that. And I think that we probably see more of the same, even on the bad news side, where we see potentially shattering bad news come out, and the market doesn't really respond the way that we anticipated. So I guess from here, the assumption is that, well, maybe what we saw over the weekend was just rumor, right? Right. And this happens in markets, or potentially, the real fallout can come next week. We don't really know. We have to wait and see what happens. But I think the clear message is that financial markets and institutions are under stress. And, this is this is by virtue of the difficult conditions that we've been in for the last, 9-10 months. Post-COVID, we've been through a very, very difficult time. And I think that, that all that stress and, the inflation story and all of that, the conflict in the Ukraine, all of these things are starting to pile up now, and they're starting to put a bit of stress on the system. So I guess the expectation for the rest of the week, well, it'll be the same as last week. Crazy volatile, super unpredictable, and probably better to just stay away from it, right? I mean, the best thing we can do now is remind ourselves that, particularly if you're a long-term investor, have cash available, pay off your debt as fast as you can, and if we do see more downside in the market, that is a massive opportunity for us to buy stocks and to get invested in the market. Just because there's bad times on the horizon doesn't mean it's not a massive opportunity for us. So I think if we change our mindset to that, we'll be able to survive. Yes, in the short term it might be unpleasant, but in the medium to longer term, it's a fairly big opportunity for us to make some good returns if we are fearful, or if we are greedy when others are fearful.
Well, Well, very briefly, let's talk about Brent crude futures, which have surged more than 4% towards the $89 per barrel in early trade. That was amid this increasing speculation around OPEC Plus considering cutting production by up to 1 million barrels, I think, per day. Put that in context and what it could mean.
So this is also a bit of a complex topic, and I think one that I don't want to sort of spend too much time on. But we have an ongoing energy crisis in Europe. So the fact that Brent crude oil prices have been under so much pressure is a bit counterintuitive, right? We've seen a number of different things taking place. One, the United States has released oil from their strategic reserves in larger numbers than ever before in U.S. history. And we are starting to see that oil reserves in the U.S. are, nearing the bottom of the barrel, so to speak. And at some point, they're going to have to come back to market and replenish those, those inventories or those reserves, the emergency reserves. So this is a very interesting position that it seems that OPEC has the U.S. in, if you will. It's almost like, and remember, Russia is a big member of OPEC. So it seems as though this, that the battle lines are being drawn all over the place. So essentially what's happening is OPEC is pushing to cut production somewhere between 1 and 1.5 million barrels per day. And we're expecting this news to come out essentially by Wednesday. They have meetings and they'll make an announcement. So that has got the oil price sort of up a little bit. And we have to, I think, acknowledge that the oil price has artificially been suppressed over the last few months because the U.S. is continuously releasing some of its reserves. At some point, the U.S. reserves run out. If we do then see, I guess, OPEC push the United States into a corner by, listen, guys, we're cutting production and you need to replenish your reserves, that's going to push the oil price quite a bit higher. At least that's my view at this stage. We'll have to wait and see whether or not that's right.
On to EOH. They're set to announce details of a planned capital restructuring. I always have to get that right. And that's expected to happen later this month. How much detail is available so far, and how might that shift the dynamic for them?
Well, there's not too much detail available at this stage. We know that they've made some big strides in paying down their debts, where they obviously had a very tough time. Well, they also had their hand in the cookie jar a few times, so followed by a very tough time over the last 2 years, and they reported some nasty losses. That seems to be turning the corner now as those losses are starting to reduce. They're starting to come back to profitability. They've got something like 450 million rand in cash. They've got undrawn facilities. So they're starting to work their way out of the hole that they were in. Obviously, this meant that they had to do some asset disposals and that type of stuff as well. And now they're essentially saying, well, look, we're back in a position that we're actually doing relatively well. We're making a little bit of profit. We're returning to normal operations. We've cut all the stuff we no longer need. We're now, figuring out a way to restructure the business so that we don't essentially get crushed under the debt burden that they have, right? Because the problem is often that the market capitalization of the business is smaller than the amount of debt that they have, and the revenues that the company makes, it's running at a loss, plus it has a lot of debt, and it doesn't have enough assets to cover the debts. It's a bad look, right? It's a bad situation to be in. So it seems as though they're working their way out of it, and we'll have to wait for the end of the month until we see what their plans are with the restructuring. At present, the share is still suspended on the JSE, so it's not trading. So a little bit of good news today, but I guess we have to wait and see later this month when they're actually able to say to us, well, this is exactly how we're going to do it. For now, all we know is that they've been making progress in paying down debts and getting, the bad assets off the book and returning the core business back to profitability.
And in 30 seconds or so, Petri, bring us up to speed with that Vunani acquisition. 50% of the Verso Group now acquired. What are the specs of the agreement?
So we don't know too much. We know that the transaction was small enough to not be a categorized transaction, so they didn't disclose what they paid for Verso Group. Verso Group plays more in the institutional pension fund space, particularly in the Western Cape, which aligns with Vunani's sort of institutional business model, where they do business-to-business type of stuff and don't deal so much with the retail client, but rather, do value-added services to fund managers and the like. And this helps them, these two companies are quite aligned with their goals, and there's some fancy technology and a very skilled management team within Verso that Vunani essentially get their hands on by making this transaction, and helps them to grow their business. So we don't know the numbers that they paid, But I guess in 6 to 12 months, we will see how much difference it makes to their bottom line by how much additional revenue it adds to them. So it's interesting to see a bit of consolidating and a bit of corporate action within the financial services sector in South Africa.
Petri Redelinghuys, good to speak to you as always, Petri.